All right, so you guys want to learn how to day trade, right? Now, first, why don't you guys tell me what your daily goal is? How much money you want to make in a perfect world as a day trader, not in a world of like being, a billionaire, but just realistically. What realistically would be your goal as a trader? Let me move my chat feed over here. So per day, 500 a day, 100 a day, 200 a day, 200 a day, 300 a day, 100 a day, $10 a day, 300 a day, 500 a day, 2,000 a day. That's a big goal. 6,000 a day. That's gonna be tough. But maybe you meant per month. 100 a day, 200 a day, 800, 200, $10. Okay. All right. So my goal when I was getting started initially was 200 per day. And that equals 52,000 per year. All right, so that was my goal when I was first getting started. Now here's the blessing and the curse of the market. The curse is that, this was my experience, you can literally spend years struggling to make even $100 a day or $200 a day, and that's if you don't have a real proven strategy. Because what will end up happening is you'll have a day where you make $200, and then you'll have a day where you lose $150, and then you'll have a day where you make $200, and then you'll have the next day where you lose $500. And so it's not that you can't make money, but you're just generally going up and down and up and down. But most beginner traders, that is the line. You're losing money while you trade. You're not making money consistently. Now the blessing of the market is that once you are consistently making even just $20 a day, if you're making 20 a day, and then maybe losing 10, and then making 30, losing 15, making 20, so you're generally moving up like this. The only difference between making 20 a day and making 200 a day is increasing the number of shares that you buy. That's the only difference. Now, what I will tell you is that what I always recommend for beginner traders is that you trade for at least 1 month in a trading simulator. So a trading simulator, and I'll put this up here. Let me just move this over. So this is a trading simulator right here. This is the one that I have for our students. So there's the charts on the right and the actual window here on the left. So this is where you would go in and you would press the buy button to buy shares. You press the sell button to sell shares. Until you have proven that you can be profitable in a trading simulator, you have no business trading with real money. Don't even start. So first, prove that you can be profitable for, I would generally say at least a month in a trading simulator. And then once you've done that, then switch to real money. And start with small share size. Start with, I often say 100 shares. So 100 shares. So if you make $20 with 100 shares, how many cents per share would that, how does that work? Well, if you buy a stock at $2 and you buy 100 shares and you sell it at $2.20, you've made 20 cents per share. So if you had 1 share, you'd make 20 cents. If you have 10 shares, you make $2. And if you have 100 shares, you make 20 bucks. And this is where we have the scalability. Okay? So with 100 shares, you're making 20. With 1,000 shares, your goal is 200. With 2,000 shares, your goal is 400. And with 4,000 shares, 400. And with 4,000 shares, your goal is 800. Now, you might say, Ross, if you're so successful, why don't you go up to, 40,000 shares up here and do 8,000? What I have found is that as you scale up, you start to approach diminishing returns. To a certain point, it actually will start to decline. And the reason is due to liquidity in the market. You simply can't buy $100 million of stock for a day trade. You can easily get in with 100 shares, 200 shares, but you can't get in and out with 40,000 shares with the click of the button. It's just not reasonable. So there is a limit to scalability as a day trader, and that's the reason why, hedge funds and things like that, they're not really looking at day trading because they've got hundreds of millions, if not billions of dollars to invest. The $300,000, $400,000, $500,000 a year from day trading, for them wouldn't be worth the time. But for us, it absolutely is worth the time. All right. So how do you get started? Well, I think the first step of getting started day trading is realizing that, number one, this is a career that it's the discovery that this is a career that many people are doing, that it's actually a profitable venture for some people, not for all. Day trading is risky and it is hard, no question about it. But there are some people out there that are profitably trading. So I would say the first step is just simply the discovery that this is a thing that people are doing to make money. The market is open Monday through Friday, and this is something that may be worth me learning more about. All right. The next step, once you've discovered that day trading is something that's interesting to you, is learning really the mechanism of how it works, what the platforms are like, and how to actually start putting money into the market or start testing a strategy. The biggest challenge that most beginner traders have is that it is incredibly easy to open a Robinhood, E-Trade, Ameritrade account and jump in there and press the buy button and buy 2,000 shares of a stock at $2, right? It's super easy. Almost any single one of you guys could do that tomorrow. It doesn't take a lot of effort to do that. But most beginner traders, with those types of trades, just jumping in this or jumping in that, will lose money. They won't be consistently profitable. And so that's when you discover that in order to have an edge in the market, in order to walk away consistently profitable, I really need to have some type of strategy and a set of rules that I follow every single day for where I get in, where I get out, how I choose stocks, and things like that. Now, all right, so if the goal is $200 a day, in my opinion, the easiest way to get that is to focus on a stock that has news and has a reason to move higher. That's generally what I focus on, stocks that have news. It could be news like quarterly earnings, it could be news like an FDA announcement, clinical trial results, anything like that. But I like to focus on stocks that have an actual news catalyst. And I like to focus on lower price stocks. Most of us, when we're getting started trading, we don't have a lot of money. We're starting with relatively small accounts. So why don't you type right now in the comments how much money you're planning on trading with. If you're going to start a day trading account, just throw a number out there, whether it's, whatever it is, just throw it out there and I'll just kind of see where you guys are at in terms of account size. $1,200, $500, $1,700, $3,000, $1,500, $2,000, $4,000, $6,000, $60,000, $3,000 to $5,000, $5,000, $50,000, $2,000, $40,000, $20,000, $500. So there's a bit of a range. All right. Now, this is kind of interesting. So many of you guys have heard about the dot-com bubble, and I can put up my charts here. So if we go back, this is the S&P 500. This goes back right now. Let me just check my style template. Let's see. I'm going to go to 24-hour. All right, so this right here was the dot-com bubble. All right, so from 1995 right here all the way up to the year 2000, the market was just, it was on a tear. A lot of stocks were ripping up 100, 200, 300%. The overall market here was up like 400%. And then we had, then the bubble burst. And we had this long period of the market trending down. And this went from the year 2000 to 2003. In 2001, the regulators decided to do something kind of interesting. they were concerned about the number of people who had been day trading using margin during the dot-com bubble and who had lost money and were in debt to their broker. So for those of you guys who don't know how margin works, a margin account, and you can open a margin account with any broker, E-Trade, Ameritrade, it doesn't matter. If you put in $25,000, these brokers will give you 4 times leverage. That's margin. And so with $25,000 times 4, you actually have $100,000 that you can day trade with, which honestly is kind of crazy. You can open an account, you fill out the margin application, they approve most people, and just like that, you're day trading with $75,000 in borrowed money. And in fact, some of the big hedge funds and firms out there during the 2008 financial crisis were investing on margin. So if you invest on margin, and let's just think back to the 2008 financial crisis, you invest on margin, you've got $100,000 in this, let's say you buy a $100,000 position. Well, if all of a sudden this drops by 25%, which ultimately would be a significant drop, but let's just say that happened, then it's only worth $75,000, and your $25,000 is worth 0. Which means the broker closes the position, they get back their $75,000, and your account is gone. It's gone. Now, if you have a big firm like Lehman Brothers or something like that, and they're investing on leverage, what happens? The entire firm goes out of business. And so, of course, there was regulation that came into place after 2008 to prevent this from happening again. And in 2001, to prevent beginner traders from making that type of mistake, February 27th, 2001, the PDT Rule was put into effect. It's the pattern day trader rule. And that rule states that if you're going to day trade more than 3 times a week with any U.S. broker on margin, you need a minimum of $25,000. And so then you have 2 choices to make. 3 actually. You can trade with a cash account, and you can day trade with as little as $500. But when you have a cash account, you've got to wait 2 days for every trade to settle. So you really can only trade like every other day. You can trade with a margin account if it's above $25,000, or you can trade with an offshore account. These are your 3 choices. I've done each one of these 3. I've used offshore accounts in the Caribbean that don't enforce this PDT rule. I've used cash accounts, and I've used a margin account where I'm above $25,000. Obviously, that's great if you can do that, but a lot of folks as a beginner trader aren't going to want to put $25,000 on the line. If you're in the position where you can, then that's terrific. But for those that can't, really cash or offshore are your 2 choices. So when I did an offshore trading account in just this past December, just a few months ago, what I did was I funded an account with $500. All right, so $500 in the account. I didn't have the $25,000. I did a small account challenge. And during this challenge, I traded 3 times every day. 3 trades per day. And by the end of the month, my account had grown to $53,000. From $500 to $53,000, trading 3 trades per day. If I had done that same challenge over here, I would have only been able to trade probably at most once a day with $250. So I could have set up a $500 account, but I would have only been able to trade with $250 every day. So you trade with half the balance every day, and you're waiting always 2 days out for settlement. I grew my account more than 5 times faster by using an offshore broker. So this, for me, made sense. it was worth it to grow my account faster. But for some, you'd say, I'd rather spend the first 30 days just trading in a simulator, just getting a feel for whether or not I can figure this out. And then if I'm profitable at the end of 30 days, then I have to make the decision of, do I use a cash account with E-Trade or Ameritrade? Do I use a margin account with 25,000 and up? Or do I use an offshore broker? And the choice is 100% yours. It's a risk and reward analysis. And it's one that ultimately we all have to make when we're starting trading. So out of curiosity, and those of you guys who are familiar, the offshore broker that I used in December is called CMEG. CMEG. So I'd be curious just to hear your input of which you think is better, using a cash account, using a margin account that's below 25,000, which means you could only trade 3 times a week, or using an offshore account. So those are your 3 options if you're below 25,000. What do you guys think makes the most sense? Again, not to put the apple cart ahead of the horse. That doesn't sound like the right way to say that. But in any case, the horse ahead of the wagon. Because ultimately, the first step is just to prove that you could be profitable. And if you can be profitable, then let's handle the next step of making the decision on the brokerage account. It's kind of like sometimes traders will say, Ross, I'm thinking about learning how to day trade. Should I set up an LLC to start day trading with? And again, that's something that a lot of traders do if you're profitable and you're trying to maximize your write-offs and things like that. But let's cross that bridge when we get to it. So first, go through the simulator, prove that you're profitable, start actually making some money, and then maybe after your first year of being profitable, for your second year, take the time to set it up if you want to. But it's, again, something that you do when the time is right. All right, so I wanted to cover the PDT rule and get into a little bit of the broker talk, just so, because I know that those are 2 really common questions. And in terms of brokers, my preferred broker for small accounts, number 1 is CMEG. Number 2 is TD Ameritrade. And number 3 is E-Trade. So those are my preferred. Robinhood and Webull, I don't like, because I don't like trading on my phone. I don't like trading on apps. I just don't think that they're as good as TD or E-Trade. And then CMEG, of course, is preferable if you have a small account. But if you have an account with 25,000 or more, then you absolutely could use one of the bigger brokers. Okay. So I answered the question of which brokers I like. I talked a little bit about the pattern day trader rule. I think I talked about how much money you need in order to start trading. The minimum is $500, and that's true with TD Ameritrade and with CMEG. I can't remember what E-Trade's minimum is. Not to say that if you had more money to start with, that wouldn't benefit you, but I've proven through several small account challenges that even with as little as $500, you can easily set up an account. The minimum account size is anywhere from 200 to 300, sometimes 500. Okay? So now the question is, in terms of how do I get started trading, how do I, with this really tiny account, manage risk? Right? That's the challenge. You want to make money. You want to grow the account. You don't want to take a lot of losses. So my recommendation, of course, is to set up an account in the trading simulator, whether you use the one that I provide for my students as part of the Warrior Starter course or the Warrior Pro course, or you use something like TD Ameritrade paper money. You set up an account, you set it up at $500, you start practicing. So in terms of managing risk, this is the way I think about it. I want to risk $1 to make $2. This is called a profit-loss ratio, the profit being 2. Profit-loss ratio of 2 to 1. If you use a profit-loss ratio of 2 to 1, your break-even point is 33% accuracy. Meaning if you're right 33% of the time, you will be breaking even. Okay? Now, so far this month, in the last 3 days, my average winners have been a little over $200. My average losers have been about 100. And my accuracy has been 81%. Okay? Now, I have taken about 34 trades. And my net profit right now is about $5,000. And that's in just 3 days. The reason that I'm able to make that much money is because of this profit-loss ratio. If my average losers were $300 and my average winners are only $200, I have a negative profit-loss ratio, and I'd have to be right more than 50% of the time just to break even. In fact, I'd have to be right closer to 60% of the time in order to break even. And that makes the margin for error very small. And essentially what you're doing is you're stacking the cards against you. So let me pull up my stats here for the month so far. I pulled that off the top of my head, but I'll show you the actual statistics here. So let's see. I gotta minimize eSignal. Okay, there's eSignal. Here we go. Okay. So these are my metrics here. Let's move this over. For the month so far. All right, so actually $247 are my average winners. $104 my average loser. So the question here is, are you comfortable risking $104 to make $247? I'm comfortable with that, especially knowing that I'm right almost 82% of the time right here. Now, I'm not using, just like CMEG, the broker that I use actually still charges commissions. So if you use TD Ameritrade or you use E-Trade, no commissions. But I use a broker that still charges commission. And I use that broker because I really like them. I've been using them for a really long time. The bulk of my profit, and I could just pull this out here, I'll do that in a second. But the bulk of my profit has been from using this broker, so I don't want to change what's been working. So I'd rather just keep paying this commission since it seems to be working well for me. So that's $5,816 of profit on 32 trades so far. If I go to price and volume right here, the majority of the stocks I've been trading have been between $2 and $5. I have a couple of trades that are over $5 and looks like one trade that was under $2. Days and times, the bulk of my profit is between 9:30 and 10 a.m. So I trade for a really short period of time from about 9:30 to 10:30, and the bulk of the profit is in the first 30 minutes. So if you have an extra hour a day over the next few weeks or few months, and you want to watch me trading every single day in the morning, you can literally watch over my shoulder as I'm trading. I start my watch list around 9:15 a.m. The bell rings at 9:30. I start trading then, and I trade until about 10:30. Then I do my midday recap. You don't need to trade for 7-8 hours a day. This is $5,800 of profit in 3 days, trading for about an hour a day. I'm a big advocate of keeping it simple. You don't want to overtrade. You don't want to overstay your welcome. You want to focus on A-quality setups, trade the best, leave the rest. Now, of course, I have the advantage of many years of experience. So the metrics that you're seeing right now, I have a lot of confidence in this strategy because I have so much historical data to back it up. as a beginner trader, how do you develop that same level of confidence? This is a really challenging one because as a beginner trader, you haven't been you have no experience trading, you don't have a strategy, and so you could come in and say, well, I'm going to make sure whenever I take a trade, I risk $10 to make 20. So I have the 2-to-1 profit to loss ratio. Okay, so that's good. You're managing your downside risk, but then the question is, how do you find stocks to trade? And what are you going to trade? Are you going to trade Apple? Are you going to trade Facebook? Are you going to trade Alibaba? Are you going to trade low-price stocks? Because the thing is, most beginner traders, you won't know about low-price stocks. You won't be familiar with them. And this was kind of the problem that I had when I was getting started. When I was first getting started, what were some of the stocks that I knew about? I certainly knew about stocks like, let's see, Apple. Hang on, I'm just going to move this for us. So I knew about stocks like Apple. I knew about stocks like ExxonMobil, American Electric Power, U.S. Steel. Most of those stocks are priced anywhere from $50 all the way up to, at the time, $700. All right, so if you have a $500 account, generally speaking, these stocks are too expensive. At most, what would you be able to buy? One share? Not even of Apple when it was at 700. You wouldn't be able to buy one share of Amazon. You could buy 10 shares of lower price stock, but you really can't trade with very much share size. So what I ended up realizing was that most of my bigger winners were on the lower price stocks, and that the lower price stocks were really good for growing an account because let's just say, for instance, and I'll just let's take a quick look at a stock that we traded last week, just as an example. All right, so hopefully you guys can see my chart here. Yeah, Caterpillar, that was another one, Chris. Yep, I was trading Caterpillar. So this was APOP here from last week. So here's the day right here. Let's just look at this, where this stock, really unbelievable, squeezes from $1.50 all the way up to $4.62. Now I can dial in and show you the exact place where I'm a buyer, exactly where I get in, exactly where I get out. But to begin with, let's just talk about why this is a stock worth trading and how I would have found it. All right, so this is a stock that's worth trading because it's under $10. So if you put $500 into a trade, and let's say the stock's at $2, it goes up to $4, right? You've made $500 of profit. You've doubled your account in one day. That is not going to happen trading Apple, Netflix, Facebook, Google, unless you're trading options. But to learn how to trade options is it's kind of like, it's one thing to learn how to ride a bicycle. You've got that skill forever. It's another to learn how to ride a unicycle. A unicycle is going to be a lot harder. It's going to take a lot more time. A lot of people will just never figure it out. Or, trying to learn to ride one of those bikes that has the huge wheel like that and the tiny wheel there. I'm not saying that there aren't people that can do it, but you're trying to learn something that is inherently very, very difficult. Day trading is hard enough without having to try to figure out the derivative markets of options. So to keep it simple, we want to focus on buying stocks and selling them higher for a profit. And so what I generally found was that stocks between $2 and $10 are the best for account growth. They're actually incredibly popular among retail traders like us because you can put $500 in and grow your account very quickly. You can put $5,000 in, $10,000 in. You can't really put in $500,000. Unfortunately, most of the stocks, if you were really going to try to buy $500,000 worth, you'd have to take a fair amount of time slowly accumulating shares getting in and then a period of time getting out. It's just not as easy to get in and out. And so again, that speaks to the sort of scalability of day trading, which is that you can grow from 100 shares to 200 to 400 to 800, and then up when you get close to 10,000, you start to come down a little bit. And either you adapt a secondary strategy that picks up here, or you start to decline in profitability. Now, this secondary strategy could be focusing on these higher price stocks, for instance, where you could trade with larger amounts of money. But most traders that I've found or that I've known will really just start kind of find their sweet spot somewhere in here, where they're maximizing their profit while still keeping emotions low. Because once you start to get up here of trading with 15, 20, 30,000 shares, you can be risking $10,000, $15,000 in a single day. And although you may be able to afford it financially, mentally, the experience of losing $15,000 in one day is difficult for a lot of us to handle. And then what does a red streak look like with this type of share size? What happens if you have 3 red days in a row? You're down 45,000. Whereas a red streak here, 3 days in a row, you might be down 400, or you might be down maybe 4,000. And that, for a lot of traders, is much more manageable. It's easier to handle than the big losses that come with really big share size. But again, the strategy that you choose and the way you manage risk will be, in a lot of ways, a reflection of your personality. So this is my 2 cents with learning how to trade. The best approach is to find someone who is a profitable trader, to learn their strategy inside and out, and start practicing it for yourself. And this is my experience of learning how to trade was kind of interesting because I didn't have anyone that I was able to learn from. I tried learning a little bit from people. Certainly there's YouTube videos out there and things like that, but you can only learn so much in a YouTube video. And a lot of people, they only show one side of the coin. They only show their winners, they don't show their losers. And even those that might show winners and losers, it's hard to really understand exactly what the strategy is until it's been very clearly articulated. And it's kind of like, it's sort of like there's a proven business model for certain things. If you want to get into the craft brewing, beer brewing industry, there's a business model for that. It will lay out what your profit margins are, what your overhead should look like, what your balance sheet should look like. And so you can measure yourself against others that are already doing it, and you kind of have a template that you can work off of. And that template will help you understand whether or not it's even feasible to get into this industry. Certainly doing something like opening a coffee shop or a coffee roasting business, there's a business template for that. This is what it looks like. This is what you have to do. This is the equipment you need. And with day trading, that never really was the case. And so that was what I started doing that was very different from what anyone else was doing when I first started teaching. I actually put together what is essentially a business plan for how to day trade. And so I'm going to share a little bit of that with you right now. Again, those of you guys just getting logged in, there's a link in the description that I want you guys to click. And while you click it, so you don't miss anything, I'm going to go grab my drink. Click that link in the description for the beginner's getting started guide. It's a kit that I put together specifically for beginner traders that outlines a lot of things that we're discussing now, but also goes into more detail, which I think you guys will really appreciate. All right, so you guys who are clicking on that, you're not missing anything. Just walking to get my drink. No, sitting back down. 2 questions on the offshore broker. So, offshore broker. So let's see. Make sure this is big enough. All right, so we've got broker. Oh, this pen doesn't work super well. Well, I'll just use it anyways. Now I gotta go get another one. Oh, there we go. All right, I'll get a couple here and that'll be good. So we're gonna start laying out the basic business plan for getting started trading, okay? So we've got our, and I guess this, I would say this would be under tools. So you've got broker, CMEG, or TD Ameritrade. Those are I'll just put those as my kind of two preferred. Again, if you want to use interactive brokers, you want to use E-Trade, you want to use Fidelity, Charles Schwab, it's probably fine, but I'll just put that to start. Okay. Let's do equipment. 1, computer. And that's kind of it. I like to have external monitors. The ones that I have are $100 each on Amazon. So, grab 2 monitors. 2 monitors. It's $200. Maybe you don't do it on day 1, but you plan to do it, in a few weeks or a few months. So that's kind of your overhead right there. It's kind of amazing. In terms of, last year I made $370,000, and my day trading overhead in terms of equipment, a computer with a couple monitors. The tools, I've got my broker. What do I also need? Most brokerage platforms are going to give you charts, and they're going to have scanners built into them and everything else, so you don't need to subscribe to anything else there. Obviously, education is important. It's not that much different from learning any other trade, whether it's electrical, plumbing, welding. This is just a business that you happen to be able to do from home. So, warrior classes. Again, you can make the decision for yourself of which ones you want to take or whatever else. So we've got tools, education, equipment. And this right here is sort of how you get the next thing, which is strategy. And this is kind of also, I would say, your niche. All right? Let's say you want to be an artist, or you're naturally artistic, and you want to be a painter. So it's like, okay, well, within artist, trader. Okay, well, what kind of trader? Are you a futures, forex, cryptocurrency? Are you, what kind? So artist, what kind of art? Is it sculpture? Is it pottery? Is it painting? Is it drawing? Is it charcoal? Find your niche. So what's your spot? And again, that can be sometimes a product of, well, this was someone I met that helped me develop this part of this niche, right? So if I happen to be a Forex trader and I was teaching you Forex, you might be like, oh, well, I like this guy Ross. He's, seems like a good teacher, so he does Forex. Okay, I guess I'll learn Forex. Sometimes it is just the nature of, I had a teacher who was really good and helped me learn this, and this happened to be what they were good at, so it's what I learned. But you got to find your niche, because you can't do everything. You can't trade Forex, crypto, futures, large cap, small cap, everything at once. You got to have one thing that you're good at. It's kind of like up in New England here, a lot of the farmers, they do these kind of like boutique, artisanal, heirloom tomatoes or something like that, because they can't produce tomatoes in the same quantity as the big, kind of like mass agricultural farms out west, and so they have their niche, and that niche allows them to do really well. So it's kind of the same with trading. It's don't try to be a jack of all trades and a master of none. Master one strategy. And so once you find that, then you have the outline of the strategy. So you might have rules. And let's just say, number 1, it's stocks between $1 and $20. So lower priced. let's say number 2, it's, we say trading 9:30 to 10:30 a.m. Eastern time only. And let's say number 3, it's risk 100 to make 250. Right? So you start putting this together. These are the rules of the strategy. This is very surface level, but this is what I get into depth in the classes. So through these classes, this is where you'll learn how to find the right stocks to trade. Because it's like, okay, well, I'm trading stocks between $1 and $20. There's 1,000 stocks between 1 and 20. How do I find ones that work? How do I find the 1 or 2 each day that I should be trading? So that's what I walk you through. Trade between 9:30 and 10, that's straightforward enough. Risk 100 to make 250, okay, that's straightforward enough. Have max risk and risk parameters set in your account, that's something that's really helpful. But this is kind of how you start to develop a strategy. And it can be on the surface like this. This is the high level, and then you get into more detail. Okay, well, A, B, C, right? Stocks between 1 and 20 with institutional ownership of less than X amount, with outstanding float of less than X amount, with a news catalyst, with high relative volume, with RSI of this, with MACD of that, right? So then you start to fill out the details underneath this. Trade between 9:30 and 10 a.m., however, most aggressive between 9:30 and 10, and then trade with smaller size 10 to 10:30. Risk 100 to make 250. Okay, well maybe that risk is different at different times of day, or maybe it's different different times of the week or different times of the month, or you adjust this based on the strength of the overall market. So these are kind of the nuances within a high level view, and then going deeper down to make it more granular. The goal is that you're able to put together a document that outlines your business plan. It includes the tools, the equipment, the education, the risk that you're going to take in terms of this endeavor to learn how to trade, how much money you're willing to put into it, and then the rules of the actual strategy of how to find stocks to trade. We know that we can set up an account with as little as $500. We know that you can get a computer on Craigslist or Amazon that's used for less than $1,000 if you don't have one already. So, all in here could be $1,000. And then you've got the educational programs that we have over at Warrior Trading, which you guys can check out. And that essentially is your overhead to get started at a minimum. One of the reasons that I did those $500 accounts was because sometimes traders would say, Ross, I have $3,000 to start trading. Why should I put $1,000 or $1,500 towards education? I should keep all of that money for my broker account. And what I wanted to show you was that, number one, in my opinion, it's not about the size of the account that you have to start. It's about the education. It's about the strategy. You can start trading with a $50,000 account, but if you don't have a strategy, you're going to lose money. You can start trading with a $3,000 account. If you don't have a strategy, you're going to lose money. And so you need to start first with the development of a strategy, with trading in a simulator. And the last thing that you should be doing is opening a real money account. Open a real money account once you've gone through the Warrior Starter class, you've gone through building your strategy, you're in the Warrior Pro class, or you've just gotten into it, and you're showing proof of concept that you're making money in the sim. So, if you start with opening the account first, and some traders will say, well, I'm just going to take a couple trades and see if I can make money to pay for my education. And what usually happens is they lose money because they don't know what they're doing. And then they start basically in the hole. Or they, with no plan to fail. Right, exactly. They basically just shoot themselves in the foot before they get started. And, I'm not saying any of this just to be, hard on you guys or whatever. It's just the very fact that when I got started, I made all the mistakes. I made all those mistakes. I didn't have, number one, I didn't have the right equipment. I didn't have the right broker. I had no understanding of risk management. I just opened my first account and started trading in it. And guess what happened? I started losing money. And then because I was losing money, I started getting really stressed out. And you don't have to do it like that. I mean, you really shouldn't do it like that. The way I learned is not the best way to learn. Now, yes, within the beginner's getting started guide, I do have a link in there where you guys will be able to download a copy of my book. This will help you. There's no question about it. If you want to learn how to skydive, it's probably a good idea to read a couple books about it. It's probably a good idea to read a couple horror stories. Make sure you know what you're getting into. But ultimately, reading a book is not going to equip you to jump out of an airplane by yourself, right? There's a process of learning, which is converting this knowledge into a skill. You guys right now, just in the last hour or so that we've been hanging out here, some of you have learned a lot. I hope. Let me know if you think you've learned quite a bit. So that's knowledge, right? You've learned a little bit about the price range of stocks that I trade, a little bit about risk management, a little bit about how to get started trading, brokers and things like that. But how do you convert knowledge into a skill? It's by practicing. It's through experience, right? And yes, please hit that thumbs up button and feel free to share with a friend if you do feel like you've learned quite a bit. If you're not already subscribed to the channel, I encourage you to subscribe. I'll be live streaming, as always, tomorrow morning, doing my pre-market analysis. I've got, of course, that beginner's getting started guide for you guys to go through between now and then. But you have to start practicing. I mean, it's practice makes perfect. Sometimes, people will say, who are maybe frustrated, man, Ross must just be really lucky. He must have had some good luck when he first got started, and he just figured it out along the way, but it must have just been luck. And if that were true, then what it would mean was that the harder I studied, the luckier I got. So was it luck or was it from studying? I think it was from studying, So I want to encourage you guys to start studying. And many of you who are in this situation right now of having a lot more time on your hands, dedicate this period of time to learning a new skill. It's a skill that you will have for the rest of your life. It's going to teach you a lot about yourself. It's going to teach you a lot about risk management. It's going to make you better equipped to handle the ups and downs of the market. And I think it's a good use of your time. Full disclosure, day trading is hard. Day trading is risky. Most of you guys watching this right now probably won't go on to really do much with what I've just shared with you, or to really take this super seriously or become successful traders. But there is a small handful of you who will. And you'll be able to look back and say, Ross, this was the moment where I took the leap and I learned how to trade. And maybe a year from now, maybe 2 years from now, you become a member of the 100K Club at Warrior Trading, which is a badge of honor that you get in the room every time you're typing, just like you guys are commenting right here. You'll have a little 100K Club badge right next to your name that shows to everyone else that you're someone who's made more than $100,000 day trading. On Friday, we did a little session with me and a couple of the students that are in the 100K Club, and we sat down with Ted and Diane, who run the trading psychology program at Warrior Trading, and we talked about the fears of missing out, the fear of missing these big moves in the market, and how even after years of trading, we still sometimes have it. So trading, on the one hand, is a skill, but the ability to be a really good trader every day is a little bit more like a muscle, because it's something that if you stop focusing on the things that make you good, it'll atrophy. And so that's kind of like, being able to focus on having discipline, being calm, cool, and collected. And I can tell you that I have days where I come in and I'm really centered, I feel really strong, and I have other days where I come in and for whatever reason I'm just not on my center and I don't feel as grounded, and those are days that I am much more likely to not be as good of a trader. But fortunately, through my years of experience, I've developed a pretty good sense of awareness about where I am on any given day. So I don't get myself into that situation. So you just said you want to see my Lambo. So I would, I think about that sometimes. What is it that makes profitable day traders want to buy Lamborghinis? Because, it seems like there's a lot of traders out there who have become successful. And successful as a day trader usually means you've made $1 million or more. So, let's say you make $3 million, $4 million, $5 million as a day trader. And then the first thing you do is go out and buy a Lamborghini. I don't know. The nice Lamborghini is like 400, 500 grand. So it just seems like a funny thing. And I don't know if it's because it's just this culture right now with the Kardashians and everything else that it's just really fun to show people how much money you've got, or to be like, yeah, I've made it. I'm rich. But, Kardashians, of course, are worth hundreds of millions of dollars. So a Lamborghini is literally a drop in the bucket. Whereas for a day trader who's made 500 grand, well, that's pre-tax. They paid tax on it. And that Lambo, or a trader who's made a couple million, that Lambo for 400 grand, that's a lot of money, percentage-wise. I have kind of a different approach on the car thing. I've had some nice cars, and I've kind of, I don't know. I mean, it's nice to have a nice car. It's nice to have nice things, but I can't help, like, if I pull up and I see someone in a parking lot, let's just say I'm like going through the grocery store, and I'm rolling up in like a Lamborghini, and they're loading their groceries into the back of like a Subaru. It makes me feel like a real jerk. Like, that just feels like super insensitive, and, not that it's my job to be like managing other people's feelings, but I just feel like if someone came up to me and did that when I was loading groceries into my Subaru, I would just feel like, man, I really suck. It would just make me feel bad about myself. And I don't know. I mean, so yeah, obviously people, if you see someone driving a Lamborghini, you look, and people like maybe getting looked at, and for marketing and stuff like that, obviously I know that there's folks that market with the Lamborghinis and the Ferraris, and that's lifestyle marketing. It gets a lot of clicks, I'm sure, but I don't know. I can't really. I'm not super into it. And I had my red Mercedes that I just sold. It got shipped out to the West Coast. Someone out there wanted to buy it, and I was kind of like, I'm sort of over it. Like, it was a fun car, but I don't know. I was just like, I don't need it. So I'll get a new car at some point, but I just don't feel I don't know. I don't feel like I need to rub it in people's faces. I don't know. I mean, I know someone when I was growing up who was a multimillionaire, and he drove small old cars. Knew someone else who, when I knew him, he had almost $1 billion, and he drove a pickup truck. So, I don't know. It's nice to have nice things, but also from the investment standpoint, I have a hard time wanting to buy something that's $400,000, $500,000 that will be worth maybe 20% of that in like 6 years. It's not a smart way to spend your money. So the type of cars that I do like are classic cars. I like older cars because I have a car from 1969. I bought that car. It's already 50 years old, and it's depreciated. Its depreciation has already happened. So now I just get to own it, and I could sell it in a year or 5 years or whatever for probably the same as what I paid for it. Maybe a little more, maybe a little less, but I don't. That's something that I feel like is more of an investment than anything else, and something I enjoy. So I'm okay with that. But anyway, so let's see. Yeah, actually, I did see a post about Lamborghini making face masks, which is pretty cool. So that's very cool. Yeah, and Warren Buffett, you see that he likes to drive older cars. Again, it's nice to have a safe car. I have a Land Rover that I drive. It's a safe car. I do like that. It's not super flashy. It's just a nice, safe car. It's like 4 or 5 years old, but I got it new, and it's a good car. I like it. Okay, it doesn't have chrome, or gold rims. It's just and you see them around. But it's a nice car. So it's nice to have a nice car. It's nice to have nice things, but it's in measure. I just find it interesting how so many of those day traders out there will just park that really just ostentatious car and then get those pictures. Well, I have a warranty on the car that I got, and when I bought it, I got it with I think it was a 6-year, 100,000-mile warranty, whichever comes first. So I'll probably trade it in when the warranty comes up. So let's see. How do you make the transition from paper trading to real money? So it's the transition from trading in a simulator, trading with real money, can be a bumpy one. The best thing you can do is when you make that transition to trade with really small share size, so you don't get emotional. That's the biggest thing you can do, because you will make mistakes as you get started. There's no way around it. You'll make mistakes. Everyone makes mistakes. So you want to trade with really small share size, so those mistakes don't all of a sudden set you in a really bad place. That's the best way to do it. So you start with, whether it's 10 shares or 50 or 100, you start with small share size. And then at the end of each week, you increase your share size by a small increment and just slowly increase it, slowly increase it. It's kind of like dipping your foot in the water. You go in slow. And if you run into issues right away, well, okay, it cost me $50, whatever, no big deal, right? But if you go in with 5,000 shares and in your first trade you lose $5,000, all of a sudden you're going to feel really devastated. So that's the best way to do it, but and not until you've had at least 1 month of profitable trading in the simulator. And so this is the simulator. This is my OBS, but oops, let's see. So that's where is it? There it is. So this is the simulator that a lot of our students use, and this is it's software that is used with CMEG and a lot of other brokers, but it's pretty straightforward, and I show you guys how to use it as part of the classes. But you practice here, prove you have what it takes to be profitable, and then flip the switch. All right, you guys, so I think I'm going to let you go, and I'll catch up with you all first thing tomorrow morning. Again, pre-market analysis will be live on YouTube around 9:15. If you haven't already, click that link right down below to get the beginner's getting started guide. Do yourself a favor and click it right now. And if you're not already subscribed to my YouTube channel, my Facebook channel, my Instagram channel, and my Twitter, you're seriously throwing your life away. So hit that subscribe button. All right, you guys? So that's it for me for now. I'm going to go get some things done, and I will see you all first thing in the morning. And some of you guys who may end up deciding to join the classes today, I'll see you guys in the classes. All right, that's it for me. I'll see you guys in a little bit.